All right. So today I'm going to answer the question, am I still bullish? And the answer is no. So if that's all you were wondering, you can leave right now. If you want to stick around, I'll tell you where I'm going to get bullish. And then even more importantly, be sure to watch the weekly technical analysis because a lot of what I'm going to talk about on the daily chart is going to overlap with what we see on the weekly chart. So today we'll do the daily chart analysis, and then over the weekend we'll do the weekly chart analysis, and you'll see why you should be patient here and why you should wait for price action to reveal its hand on where we're going next. So yesterday I talked about how we had the big bounce and we were now at resistance, and it was time to be cautious, meaning sitting in cash, waiting until we see where we go from here. And it's very important you understand it's completely fine to be in cash until the market reveals itself. And then this morning, before the market even opened, there was a very clear double top rejection on the NQ futures. So by simply waiting in cash, we were able to avoid a huge drawdown or loss today. And then with the double top rejection, we knew from the price action there was no reason to be bullish today, and the rest is history. So get in the habit of being disciplined, knowing when to go to cash, knowing when the market needs to show you more price action and more clarity before you place any trades. This saved us a lot of money by simply being patient, and then we knew exactly where the market was likely going today after seeing the price action overnight from the futures. So where we go from here is we need to acknowledge that we're coming back into this critical support, which is SPY 442, and this is where the daily chart analysis is going to start overlapping the weekly chart analysis, because I told you on the weekly chart analysis there was a good chance we were going to bounce to 450 and then still come down and hit that target at 430. This is looking more and more clear now on the daily chart that this could be the scenario we're about to see, because we now have the lower high rejection from 453 and then 451. And if we break to a lower low from 442, it is very likely looking like we're going to 430. So the number one thing I would tell you if you're waiting to get bullish is we either need to break the resistance above 450, or we need to get down to a stronger support from the weekly chart, which is more indicative of support at 430. So the only way I'm personally getting bullish is if we break out from the resistance. I think this is a bullish trend continuing, and then I'll be back on the bull, or I'm going to be patient and day trade opportunities that I see. Obviously taking all of the bank trade alerts, which have been very profitable. And then for my longer term personal swing trading, I would be looking for stronger support levels to start going long from, which is down there right around 430. So there's no reason to be bullish right now because we need more clarity on whether we're going much lower or simply wait for the break of resistance to confirm we are still in that bull trend. The reason I caution you to just simply get bullish now around 442 is because the back half of September is typically very bearish, and we now have price action to confirm we have a lower high rejection into an impulsive selling day on quad witching, and it's much simpler to wait for price action to confirm that we're holding support before getting overly bullish. So just be cautious here. There's no reason to get FOMO or rush into any trades. We have plenty of time to watch price action and make decisions. And the critical support on the daily chart is 442, because if we lose that, that is a bearish breakdown and means we're likely going to 430. Now do keep in mind this was quad witching, and sometimes these are just volatile days because of all of the contracts expiring. So if we start to bounce, it is still possible we go right back up there and fill that gap that opened today, which is just above 447. But keep in mind, even if we go fill that gap, that's still a lower high from 451. So in the event we go straight back up to fill that gap, you still need to be cautious, because from there we could continue to get rejected and still go reach 430. So I'm not saying don't be bullish ever. You can still buy at support. I'm simply saying there's no reason to get overly bullish until we get more clarity on this market. A very good possibility is that we do bounce from 442 and go fill that gap, but a rejection from there could be another lower high and we could still go reach 430 by early October. So very simply said, if you're waiting to get bullish, we either need to start breaking and closing back above 451 or getting closer to a stronger weekly support around 430. That is how I view the market currently, which means there's going to be plenty of opportunities for great day trading and great intraday swings. But there's a good chance going into FOMC next week that we just ping pong around in this range and chop up the majority. So be patient, make sure you have a very disciplined approach, make sure you understand the bullish and the bearish scenario, and then let the price action do all the talking and guide you on which trades you should be placing. This is what we do each and every day on the Stocks Channel Discord server, and we are absolutely crushing the market. So stay focused on this critical support at 442, the critical resistance up here at 451, and if we break either of those critical levels, you will know exactly where we're going from there, because below critical support, we're likely going to 430, and above critical resistance, we're likely going to 460. Trade the range while we're in it, and then trade the breakout, and you're going to know which direction the breakout is by simply letting the price action do all the talking. On the NASDAQ 100 triple Qs, we were down 1.71% today, and as I said in the introduction, this was very obvious that we were going lower today because NQ double topped overnight before the market even opened. So we had the gap down open, and then we had the confirmation of the double top on the Qs hourly chart, which was that double top from 377 and the break below the neckline at 372. So there is a good chance the Qs could go lower if they break critical support at 370. So critical support in the triple Qs is 370 and critical resistance is 378. I'm getting very bullish above 378 and I'm getting very risk off below 370 because below 370 we could go to 355 and then 347, and we could even go all the way down and fill that gap at 333. Nothing is impossible, and we know gaps typically get filled, so losing support at 370 would be a very early warning sign that we could be going much lower. So 370 is extremely critical if you're trading the triple Qs, so watch that level very closely. And as I always say, there's no point shorting at support, so even if you're bearish, you need to wait for that support to break down. Don't just guess and don't just assume it will break down. If we start to bounce from here, look for resistance right around 373 and 377, but the critical resistance is at daily high at 378. On the Dow Jones, we were down 1.09% today with that rejection from resistance at 350, and we went all the way from resistance back to support at 346. So again, there's a chance we just get locked in one of these ranges before FOMC next week. So the range on the Dow Jones will be 346 as critical support and the critical resistance at 350. If we lose critical support, we could go all the way down to fill that gap at 340. And if we break the resistance, we're likely going up to the gap at 360. That's why it's easiest just to wait for the price action to break the range, and then you'll know where we're going from there. On the Russell 2000 IWM ETF, we were down 1.05%, and we did get rejected from this ball of resistances that was bunched up right around 185.6, and we came right back down to critical support at 183. As I've said before, do not assume critical support levels will break. Do not short at critical support levels, wait for them to break, and if we break below critical support, then we're likely going down towards the gap fill at 176. If at any point we break 186 and then 188, we're likely going straight towards 195, and that will be a very impulsive double bottom breakout, so it could happen very quickly. So do not get overly bearish at critical support. That is a very rookie mistake. Wait for support to break and then short with that breakdown as your risk level. On the ARKK ETF, we were down 1.26% today, and we're sitting right on top of critical support at 43. And if we break too much lower, it's going to start looking bearish. Like this is a lower high rejection from critical resistance at 44.5, heading down towards the gap fill below 36. If at any point we break the critical resistance above 44.5, then we're getting more bullish for the gap fill below 49. On the VIX, we are up 7.73%, but the VIX is still below 15 and still in a bear trend. So even though the VIX is spiking, that's usually what happens during a pullback. And we really can't say we're getting high fear panic selling until the VIX starts spiking out above 15. And the VIX spiking on quad witching is very common, and there's not too much to read into it unless we get follow through next week. On Bitcoin, we're currently down about 0.5%, and we're still trading above the 20 daily moving average, and we still have the higher high breakout as long as we're above 26,200. Keep in mind, 25,000 is critical support, meaning we don't need to go any lower than that, but if we do break it, it's likely going to be a high volume flush to 22,000. If you want to wait to get bullish, you're simply waiting for the break above 28,000, and then we've likely seen the bottom and we're going back into the bull trend. On Tesla stock, we were down 0.6% today, and on Tesla, I told you to watch that resistance at 279, and if we get rejected from there and break support at 274, we're likely going down to fill the gap at 256. We rejected 279, but we did not break and close below 274, so we need more clarity here. So it's a tight range between 274 and 279. If we break 279, we're going to the gap fill below 290, and if we break 274, we're likely going to the gap fill at 256. I really do think it's that simple in Tesla, so wait for the break of that range and then place the trade accordingly. And even if we go fill the gap at 256, I do believe we'll find buyers there, and then we'll head higher towards the 290s. So if you're just a long-term Tesla bull, I really don't see any reason to panic. If we pull back, it's more of a reason to buy and not a reason to sell. On Apple stock, we were down 0.42% today, and I still think Apple is bullish from 174, meaning don't short Apple unless it breaks below 174. 174 is very critical support, and that's exactly where we saw buyers in the middle of August. So we could be just coming back down to double bottom off that level before we go higher, and we have gaps to fill to the upside at 181.5 and just below 191. Now, if we break 174, that's a different story, and that's bearish, and that means we're likely going down to fill the gap at 167. If you're waiting for more confirmation to get bullish, I would simply wait for a break above today's high, which will be a break back above about 177, and then we're likely going straight up to fill the gap above. So jumping back over to the S&P 500, it's very important you understand this is critical support we're facing, which means if we break below it, that's bearish, and then we're likely going to the critical support levels on the weekly charts. The weekly charts are very powerful and we're at very critical supports. So just be patient and have a trade plan, and you're going to do very well as long as you're prepared for both of the scenarios I just gave and you know the critical levels to pay attention to. Trading is very simple when you take out all of your bias, and you couldn't care less if we go higher or lower. You need to be a bull when the trend is bullish, and you need to be risk off and bearish when the trend breaks down. And right now we're in that territory where we could lose a critical support level and start losing the bull trend, which means we need to get risk off and bearish. Wait for the confirmation. We're very close to getting the breakdown, but we have no confirmation of a breakdown. So do not make the rookie mistake of jumping the gun. Wait for price action to prove everything, and that way your probabilities will be stacked in your favor. So next week, expect more volatility, especially because we're entering the back half of September, and that is typically very volatile anyways, and now we're getting confirmation from the price action that we could be due for a very volatile second half of the month. So be disciplined, make sure your trade plan is prepared over the weekend, and that way next week, you'll be reacting to your trade plan and not based off your emotions. We are absolutely crushing this market on the Stocks Channel Discord server and Bank Trade Alerts. And keep in mind, you can still get those Labor Day discounts on Bank Trade Alerts by simply entering the coupon codes that I'll put in the description below. If you're an existing bank member, be sure to take advantage of that annual discount because that is the best discount you're going to get. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.